Welcome to SIRA MCQ YouTube channel. Today we discuss Advanced Level A-Level Accounting Paper 2025 question number 41. This is related to theory part. Look here. There are true, false. No, we find. Look here. State whether each of the following statements is true or false as per the LKS 1 presentation of financial statement. Look here, first one. An entity should present a complete set of financial statement at least annually. Is that correct? Yes. Entity should be present a complete set of financial statement, income statement, statement of financial positions at least annually. Annually, normally all businesses prepare the financial statement. Therefore, we can agree with this. This is true. This is true. Okay. Next one. An entity should not offset. Offset means cut it, cancel it. Income and expenses. Income to expense, we can set off this. No, look here. The donation income received and donation expense paid. This is the income and expense. We can cut it. Okay. Then the example for look here. Look here. There is a donation income. No, donation income. Okay. Donation income is 1000. There is a donation expense. Donation expense is 800. We can cut it. There's a net one. Net impact is 200. Okay. This is the set off. Set off means cut it and cancelling of income and expense. Look here. Entity should not offset. We cannot offset income and expenses. We cannot offset the income and expenses. Why? Income must be separately identified. Expense must be separately identified. Cannot, should not offset income and expenses when preparing financial statements unless there is another separation. Normally, entity should not offset the income and expenses when preparing the financial statement unless there is a guideline, unless required or permitted. Permitted means we can do it. Permitted by another standard. There are some standards say, special standards say can offset. Normally cannot offset. Some standards say you can offset. Look here, example. You know LK16 property plant and equipment standard. You know there is a sales of look here. There is a land sale. The land selling, land cost is 1000. No, land cost is 1000. This land was selling price sell to in cash 1200. This is the selling price. According to the LK16, this is the expense. No, the deduction of asset, and this is the selling price, income received for entity. But the property plant and equipment standard said you can offset this income and expenses. Happy and unhappy, net effect is 200. 200 is gain, land disposal gain. This gain was calculated after offset income and expenses. Okay. Therefore, the sum standard especially said you can offset, but normally you cannot offset. Therefore, this statement is correct. We can agree with this. Okay. This is true. Okay. Next one. Look here. An entity can rectify. Rectify means correction. Inappropriate accounting policies. There are some accounting policies are not good for entity. Therefore, inappropriate accounting policies. Entity can rectify correct inappropriate accounting policies by disclosing them in the notes to the financial statement. You note some reasons for that and you can rectify this accounting policy. Is that correct? In that case, this is the policy changing now. At the policy changing, there are two guidelines. What are the two specific times? Two times you can change the policy. The first time the policy changing is a policy changing the requirement of the first one is requirement of accounting standard. The second one is a crucial one based on the manager's opinion. The manager's opinion is we can change the policy if the new policy supply the information relevancy relevant and faithfully use reason of policy changing. There's a policy changing is occurred. The relevant and faithful information supplied. The which information which information should be relevant and faithful, representing then based on the policy changing, the informations are supplied to the stakeholders relevant and faithful represent. The which information, this is the cash flows, profitability. This is the major output of the financial statement. Profitability and statement of financial positions. The managers decide that the information of cash flows, profitability, financial positions, informations supplied to the stakeholders more than the previous policy, more than relevancy and faithfully represent to the stakeholders. Based on the policy changing, this requirement is okay. The managers can change the policy. The information of cash flows, profitability and financial positions are faithfully represented, relevancy represented. Therefore, the managers can change the policy. But this statement is not enough. By the entity can rectify inappropriate accounting policies, disclosing them in the notes to the financial statement. Only writing a note inappropriate, this is not enough for policy changing. These criteria should be identified, but this is the requirement of accounting standard. This is the major one. The second one is if the company should be change the policy, the information of cash flows, profitability and financial positions faithfully represented more than the past accounting policy. Okay, therefore this is the writing or disclosing a note is not enough. this criteria should be identified by the business. Therefore, this statement is not enough for true statement. Therefore, we can write false. False. Okay. Look here. Next one. Other comprehensive income comprises. Other comprehensive income comprises means including items of income and expenses that are not recognized in the profit or loss. You know, there is a profit or loss means profit for the period. No, look here. Other comprehensive income comprises. You know, other comprehensive income including revaluation surplus. Okay, property, plant and revaluation surplus comprises item of income and expenses that are not recognized in the profit or loss. You know, revaluation surplus and revaluation surplus cannot identify in the other income or other expense. In that time, other income and other expenses is in the I write this. No, I write this. You know, this is the income statement. Income statement. You know, this is the profit for the period is there. Profit for the period. After that, we add other comprehensive income. Other comprehensive income. Other comprehensive income. Based on the other comprehensive income topic, we write property, plant and equipment revaluation surplus. Revaluation surplus. At that time, they said that other comprehensive income comprises revaluation surplus items of income and expenses, okay, that are not recognized in the profit or loss as required or permitted by the other Sri Lanka accounting standard. There is a other comprehensive income revaluation surplus not recognized in the profit or loss. Okay, revaluation surpluses cannot be identified profit or loss. This is the profit or loss area. We cannot identify other income, we cannot identify other expense. Therefore, revaluation surpluses comprises in other comprehensive income. Okay, other comprehensive income is this location. Therefore, this statement is correct. We cannot include this profit or loss. Okay, this is the true statement. This is the answers of question number 41. In next video we meet question number 42.